The uncertainty in Syria causing jitters in emerging markets. Question is, what's the best way to position your portfolio amid all this volatility? David Riedel is president and founder of Riedel Research Group, focusing on emerging markets, and he joins us now. David, good morning.
Morning.
You know, there are some people here saying after the beatdown that emerging markets have had, maybe now's the time to get exposure. But I had got to read you this quote from Albert Edwards this morning, who says, the emerging market story has once again been exposed as a pyramid of pifle. What's your take?
Well, emerging market performance has been quite mixed. You've had some disastrous markets like India and Indonesia, and you've had some markets that are actually up over the last 8 to 12 weeks, including Hong Kong and Poland. So you've had a mixed performance. I mean, I think that the longer-term story of emerging markets, of the emerging middle class, people's changing their lifestyles and quality of life, remains intact over the longer term. But it's going to be a bumpy ride, as we've always predicted in emerging markets.
What's interesting as well is people are drilling down and trying to figure out what parts of the emerging market space are attractive and which parts are vulnerable. And the conventional wisdom that this is about funding, that this is about those countries running a current account deficit, for example, doesn't necessarily seem to be what's mainly important here. I mean, how do you look across the space and differentiate for those people who do feel like they want to step a little bit out on the risk spectrum?
Well, I think a couple of things. We always look for large, dynamic, domestic sectors with attractive demographics. So you want to have countries that don't depend on external financing, but also that have the ability to take money in and improve the conditions and health of their economy with an attractive demographic supporting that longer term. So if you have an appetite for risk, you do want to be looking at some places like Brazil and Indonesia and certainly in China as a longer-term way to play some of these trends. I think some of the smaller, less liquid markets are always going to be bumpy. And places like Turkey, which we thought was a good market a couple of years ago, has shown some of the issues with political risk that you definitely need to be aware of.
Hey, David, you mentioned Brazil and Indonesia, a couple of places where rates are starting to move a little bit here. The central banks getting their ducks in a row. What would you do if you were a central banker in Indonesia, let's say?
Well, Indonesia's gone through a very difficult time over the last 6 to 12 months. They've really gone from being an investment darling to being really under a lot of pressure. And one of the things is that they've been trying to get their fuel prices back to a market rate, which has caused some political dissension and some economic tensions. So I think that they're doing the right thing, taking the longer-term view, raising their rates to protect their currencies. I hope they don't do too much of that, because I do want both economies to develop a good, healthy export sector into what we see as an improving external environment. We've had good news out of Europe in recent months. We've had relatively positive news out of the U.S. There's an improving external environment, and I hope that they take advantage of these weaker currencies to really build an export base.
Because, David, the risk, of course, if they raise rates here, even if it's to defend the currency, is going to be that it's too much for their weak economies to handle, and they're going to be dealt a recession in a couple of months' time.
That's exactly right, and that's something that they do need to balance very carefully. You know, the bigger risk in both of these places is inflation, quite honestly. Brazil has a long history of hyperinflation, and once it settles in, it can be very painful. If the Syria strike does take place and oil prices are up, Brazil will benefit. Other countries like India will get badly hurt. There's a tight line that these developing economies need to balance between growth and inflation and, of course, currencies and rates.
All right, David Riedel for us this morning, Carl, as people take another look at the emerging market space.